Thank you so much for the intro, Jessica, and welcome to our panel here at the Global DeFi Summit. Our topic, as mentioned for this session, is the evolving landscape of venture capital in decentralized finance. And there are a lot of critical and unanswered questions that our panelists here will help to explore and provide answers to. So it's great to have so many friends and audience members tuned in from all around the world. I'll be your moderator for this session. My name is Ali Madovji, managing partner at Blockchain Founders Fund, which invests in and venture builds top-tier startups and consults organizations such as the United Nations. I serve on the board of 2 public companies in the blockchain space, including CryptoStar, which is a Toronto Stock Exchange venture company, and Mechanical Technologies, which is a NASDAQ-listed company, and serve as senior blockchain fellow at INSEAD. But more importantly, we have a phenomenal panel here with us today. First off, we have Min Teo, the managing partner and co-founder of Ethereal Ventures, a crypto-focused VC and advisor to Consensus. She most recently led the venture investments at Consensus AG, the investment arm of the global software company building decentralized infrastructure and applications. Next up, we have Haseeb Qureshi, the managing partner at Dragonfly Capital, a global venture capital fund. And previously he was a partner at Metastable Capital, and before that was a software engineer at Earn.com and Airbnb. And last but not least, we have Alon Goren, who is a founding partner at Draper Goren Home, a venture studio focused on accelerating and incubating early-stage blockchain startups. Alon is also a co-founder of LA Blockchain Summit, and he has been a pioneer in the crowdfunding space. Let's jump into it. So DeFi has been booming over the past year, but many traditional VCs aren't set up to take advantage of this trend. So I'd like to start off with Haseeb. Set the stage for us. What does it look like in terms of VCs in DeFi right now?
It's a great question. So if you rewind back to pre-DeFi summer, so DeFi summer, which was basically summer last year, DeFi really took off with the advent of Compound and Comp Token and its liquidity mining program. That's sort of the shot heard around the world that started all the craziness in DeFi. But of course, DeFi has been an investable category in crypto for a long time. I think that it really starts at Bancor. Probably the first thing you can think of as a true Ethereum-based DeFi protocol, although there were things before it. And then, MakerDAO and then DYDX and the generation of DeFi that we see today as being really successful, most of it was created in 2017, 2018. So back then, DeFi was a pretty weird corner of blockchain investing. Not a lot of people were really touching those protocols at the time. They were all pretty theoretical. I remember back when Ether Delta was the only DEX that really was worth speaking about. I remember when MakerDAO initially it came out as called Psi. They changed it to DAI, and they had maybe 100 million in TVL, which at the time nobody called anything TVL. That was a term that really started becoming mainstream in 2020. But most of these things were seen as little toy experiments, and it was only a relatively small cohort of crypto native investors who were touching any of this stuff, and it was all very kind of far future and theoretical. After last year, the TVL and the volumes that we started seeing on DeFi just exploded, and it's become increasingly the case. You're seeing more and more mainstream investors starting to try their hand at DeFi investing. Now it's not going too far and wide. You're starting to see players like USV or Founders Fund getting into investing in crypto. It's not your average old. We're not seeing Kleiner Perkins or the average old school VC coming into DeFi native investing. But it's pretty clear that more and more people understand where the space is going. The difficult thing for traditional VCs investing into DeFi is that it's pretty hard to have really customized value add for a DeFi protocol if you're not very crypto native as a fund. And that's one of the reasons why most of the DeFi protocols that are getting funded to this day, primarily they look for crypto native investors, because traditional VCs, although they can be sometimes useful for the branding or the prestige, they can't really add that much value in ways that crypto native protocols generally need.
I definitely agree with that, Haseeb, and I've seen a lot of that. Min, I'm curious on your thoughts of some of the challenges with traditional VCs, in this space, and we'll come to sort of crypto native VCs later on in the discussion.
Yeah, absolutely. I think in general, like, even for us, right, like there's just so many other ways of raising capital these days in non-dilutive, non-control driven ways. So I think it really kind of ups the ante for VCs to add value. There were a lot of unfortunate things that happened from 2017 ICO boom, but, in a lot of ways also showed founders that there's another way. And I think that's really powerful. In addition, I think that's on the early side, and on the later stage, you also have a lot of traditional hedge funds, private equity funds also flooding in with a lot of capital, right? Like, Tiger's made a lot of investments, Code2's, like you see Point72 and Third Point also dipping their toe into the space with $100 million rounds, right? So I think it really just kind of ups the ante and raises the gauntlet for all of us. Like, how do we think about, co-building alongside founders in the early stages and adding value that's, a lot more than a pure capital allocator, such that, a lot of portfolio companies, they won't look back and think, why didn't I just take easier money from this guy as opposed to take very difficult money from this investor, ex post. I think in general, we work with a lot of traditional VCs because I think they do add quite a bit of value for certain companies, right? Like there's a category of crypto companies that maybe look more Web2-like, but have a lot of adjacencies to crypto assets. When they kind of get to Series B, C, are dealing with international expansion and regulation, I'll be the first to raise my hand that maybe that's not my direct area of expertise, and we'd love for them to get involved. But I think in the very early stages, it's quite challenging for them to sort of diligence companies, where we have a lot of unique insights that we get through from our own sources that they might not have access to, or the technical expertise to really sort of separate the wheat from the chaff. On the sourcing side, I think our sourcing looks quite different. Like, we spend inordinate amounts of time on Twitter, Telegram, Discord, which they might not be super used to, right? I think ultimately we work with a lot of great co-investors in the space like Dragonfly, but a lot of our sourcing also comes directly from founder relationships that we've cultivated over the last couple of years. So I do think these things maybe make it challenging for traditional VCs to really enter the space in a very, very meaningful way. And I think probably the biggest sticking point that I've seen as well is ownership. The space trends towards a lot of decentralization and distribution. We see that in cap tables too. So as a VC firm, we've also adapted and been flexible on that. So if a traditional VC comes in and says, I want to own 15, 20% of your protocol, that just doesn't work for anyone, right? And it's really difficult for us to sort of break it down why it doesn't.
Absolutely. And I've actually seen this, firsthand a number of times. I think what's been really interesting is on our side, we've just seen an influx of some of these larger, more traditional VCs starting to ask more questions, trying to get an understanding. I mean, I get sent, deals of just, from some of the biggest, traditional VCs. They're just asking for, how do I look at this company? What do you think? From a technical standpoint, what should we be looking at? And it's quite interesting because they're still having some challenges of trying to look at these. But we're hearing a little bit that some of the traditional VCs are a bit more conservative, trying to look at the space, but, maybe not fully ingrained. You're seeing a lot of token projects prefer, or, DeFi projects prefer crypto native VCs. But is there some merit, to the skepticism or some of that slow nature that these traditional VCs are taking? I mean, recently we all heard about Iron Finance. I'm sure many people know, with Mark Cuban involved and many other sort of high profile names. I mean, Alon, maybe you can share some thoughts, on this. Is there merit to traditional VCs, being a bit slower, being a bit more calculated, skepticist?
I mean, from my perspective of should they as a whole industry be skeptical or slow or anything like that, obviously I think they shouldn't be, because I'm all in on this industry and I'm biased in that I believe in it. And I think that every argument in relationship to bubbles or things like that are very minimal, because even if you look at any part of our industry and consider it a bubble, will it be orders of magnitude larger than it is today 10 years from now? 1,000%. When will the average exit happen from a deal that we do at the early stage today? 7 or so years from now. So it's a very short-term, uneducated thought, in my opinion, for them not to participate. But should they not participate in something that they don't understand and that they can't add value to, they shouldn't participate in that. So take a back seat. Let us lead the charge. I'm fine taking all the best deals with Haseeb and Min and with you, Ali, and call us up when you need help with due diligence. Call us up when you want to invest in one of our companies. And we're, for just using us as an example, right? DGH is the only 100% blockchain focused fund that's part of the Draper Venture Network. And the Draper Venture Network is 20-something funds around the world with billions under management, and most of them are much more traditional, even with Tim leading the charge, right? And Tim's fund does, of course, blockchain deals, but it's not 100% blockchain. And I've actually sat on the technical due diligence calls for some of the deals they're thinking about doing in the blockchain space, even with the people who do the normal tech due diligence for them, because the tech due diligence people for those funds don't understand blockchain. And I'm, technical, but I wouldn't consider myself an engineer. I break things, and I'll go into people's GitHubs. I'll launch projects myself. I have my own, Linode servers and goof around all the time. But I'm not as technical as probably the person who should be doing the real deep dive into technical due diligence. But that just shows how the rest of the VC community looks at the space. But just like Min said, there's certain things they're really, really good at. But they're not crypto natives. And sometimes the size of their deals and the size of their funds are so, unnatural to the space or to the size they're participating in. We're a brand new industry. You don't need Andreessen's $2.2 billion fund that they announced today to make an investment in the best early stage startups. In fact, by default, they have to go later stage because you can't deploy that kind of capital naturally in a seed stage startup. Like, they can't justify the time being spent on making a 300K investment or something. It just doesn't make sense. So people like us, I think, are very important to the whole ecosystem. And the crypto natives, again, it's an industry based on trust too, right? The DeFi groups don't really trust VCs, but they'll trust the ones who actually participate, the people who launch open source projects themselves, or at least are there with them along the way and cheering them on and understanding. So, going back to your question, should they be skeptical? Yeah, if you don't understand it, you shouldn't ever invest in anything you don't understand. But they should be learning it and understanding it because we believe in it, obviously.
I agree, Alon. And so, I think what we're hearing here is, traditional VCs have been a little slow. I think they've been skeptical. They may not fully understand it, but I think we are starting to see more and more of them starting to enter the space as well and dip their toe into it, as we're seeing even with some of these, bigger raises that are happening for capital coming into the space. I want to move over more to some of the emergence of sort of crypto VCs. And of course, this has mostly been over the last, 5 or so years. But especially over the last couple of years, I think there's more and more, perhaps each passing month. Min, I want to start with you. So you run Ethereal Ventures, a crypto native fund. How are you approaching DeFi, and how does this, differ from traditional VCs?
Yeah, I think it could be, when we talk about sort of a crypto native fund versus a traditional VC, I think there are differences in several areas. So, approach, how we sort of select companies and due diligence, how we add value, also probably philosophy. So I guess part of it is the approach where, perhaps a traditional VC needs to sort of see market readiness, which is, okay, this is happening, so I need to invest in it. Whereas I think crypto native VCs generally believe that the paradigm shift is here and, we're going to have one startup breakthrough at a time. We're going to make a real difference in traditional industry. So, that belief system, I think, is like the defining factor there. And that really allows us to take the approach of working with founders at idea generation stage super early, if they're building funky primitives that just enable them to do cool shit that they just dreamed up, we love that. Like, whereas maybe other VCs might think like, okay, well, how are you going to make money on this? Like, as like the first leading question. But, it's because, we're users of DeFi. Like a lot of us have built DeFi projects before. So, we kind of understand why it's so exciting. And I think perhaps like, in the earlier days, we maybe used the word decentralization a little bit too liberally, but, that's really not the point. It's just a better product experience, better UX, and a lot more secure, at the foundation of it. I think, in terms of the value add as well, like we like other investors, like we might not do it through the fund for a bunch of reasons, but we have the ability to sort of help bootstrap liquidity through providing liquidity. We can also stake tokens, but I think more meaningfully, just being very involved in governance, helping with a lot of sort of, grant proposals, like token, like design, network distribution. These are all very like specific skill sets where it's quite experiential. Like, you kind of can pattern match across like various projects. And each time we do it, we learn something new. And it's like really encouraging to see how far we've come from, say, like the days of SAFs where we're like, what are we going to do with this, right? I think the industry has just made so much progress since then. And if you're kind of still stuck in that, like, oh, SAFs are a bad thing, then, you're many years behind of like, where a crypto VC is today. I think looking like ahead, like, a lot of say on-chain funds and DAOs, like they're the natural cousin of a lot of DeFi too. So, thinking of like connecting all the dots and seeing where teams can go and monetize in very interesting ways. Like I think these are directions that perhaps a traditional VC might not be able to guide teams towards. And, for us at least, like, and I know like the investors on this call also agree, like crypto is a global equalizer. So is global distribution and community building from day one. So really pushing teams that, they're thinking not just about addressing one market, but like, the global market, and having that appeal from the get-go, I think is also something that's very crypto native.
Absolutely. I think those are, some quite interesting insights, into some of the differences. Alon, I want to move to you because you run Draper Goren Home and you've been leading a number of exciting DeFi and crypto solutions. But how is Draper Goren Home supporting these startups in the DeFi space? I mean, we heard that it's different from, traditional companies. How can Draper Goren Home or funds in the crypto space actually add value to these startups?
I think, it starts just like a startup with the people, right? So something we do when we're thinking about making an investment is we look at the company, we look at the founders, and one, do we love it? Do we want to participate? Do we want to be locked in a room with these people for the next 10 years? We make those thoughts, but then our first question we actually have with each other, and we say this out loud a lot when we're talking about deals, is what do we bring to the table here? Like, how can we add value? Because if we're the first investor, one of the first investors, we have to justify the amount of ownership we're going to have in something. Sometimes it's a protocol, sometimes it's equity in a startup, whatever it is, we have to justify that ourselves to justify the amount of time and effort we put into it. And sometimes we don't know, right? Like there's been a couple times where it's like, in the medical space or something that we really don't understand at all. And then Joseph and I are like, I don't know what the first step would be here, right? And then there's other times where it's exactly in our sweet spot, the kind of technology Joseph and I have been working on for our whole careers, and we know exactly how we can help them. And the way we're different is that once we do write a check, once we do become a part of the team, we're crazy hands-on. So, there's like the spectrum of investors. Some investors you don't want to be hands-on, you want them to write you a check and take a back seat, and that's sometimes the best investor for a company. And then there's the type of people like us where the day we sign the deal, we create, usually even before we sign the deal, once we verbally agree to doing a deal with somebody, we create a WhatsApp channel with the founders of the company, me and Joseph, and our team, and we start working with them. And it's dependent on the company. Sometimes it's really hands-on at the beginning. It happens in waves sometimes. And sometimes on a daily basis, we're communicating with the founders of these companies. And we're at 22 portfolio companies now. So we're learning to scale that and do all these things. But we literally are, sometimes it's me hopping in and putting on my like QA product person hat from when I worked at MySpace and Amazon back in the day, and I start beating up their product and giving them feedback pre-launch. Sometimes it's, you know, marketing exposure through our conferences, things like that. And sometimes it's me launching a WordPress plugin using their technology to be able to showcase their product, right? It's really different per company, but we're crazy hands-on in that way. And that's what really makes us different probably than the average. And we try to be complementary, right? And usually someone on our team, between me and Joseph and our team, can complement that company. And the word we use the most when we're pitching to investors ourselves or when we're talking to companies is amplify. We try to we want to be there to amplify what the company can do, because there's no amount of work that we can do that would make them successful. But what we can do is, if they do the hard work, if they're doing it, we're there to amplify it. And, you know, we participate in the governance voting, and we participate on chain and on, you know, social media and online, right? We don't take a back seat, and we're all in, you know, alongside the founders. That's what makes us kind of different.
I love that, Alon. I mean, even on our side, you know, we're super hands-on, you know, across marketing, strategy, finance. But, you know, I've heard stories about, you know, on really competitive deals where you've added a bunch of value even before signing that deal, which is, I think, fantastic to see in this space. Haseeb, I want to move over to you. And you also lead a crypto native fund, Dragonfly Capital. I mean, how is, you know, Dragonfly doing things differently from traditional VCs? How are you guys supporting startups in the space as well?
Yeah, so Dragonfly, we're fairly unique in a couple of ways, even among crypto native VCs. One aspect of that is very global. So we have a footprint in Asia and a footprint, you know, here in the US, and that allows us to bridge the gap between two ecosystems that otherwise don't really talk to each other very much. So we sort of think of ourselves as the gateway between these two worlds that allows founders who, especially in DeFi, you know, DeFi is a global phenomenon. If you just live on crypto Twitter, you might get the impression that the only thing that matters is what green frogs on Twitter are saying about your protocol. But there's this whole other world that if you've never installed WeChat, you just have no idea is even going on. And is a huge part of your capital base, especially if you're a DeFi protocol, where it's become increasingly obvious how much of the volume, how much of the flow, how much of the TVL is not Western. And of course, the point of crypto, the point of DeFi, is that it's global, is that it's borderless, is that it's permissionless. And so, you know, from the very, very early days back in, you know, early MakerDAO, Compound, UIDX, 1inch, UMA, we've worked with a lot of the very earliest protocols and helping them figure out what does it mean to be a global protocol and how do you engage your user base and your community, whether or not they hang out in Discord, which is, you know, again, only a subset of the world even has access to a lot of these products that people are using. So that's a big part of what we do that's quite different from most other VCs. But the other part of, I think, what makes us different is that we're just gigantic nerds. And so when we see like a cool new idea, like we just nerd out on it. Like that's, you know, I'm a technologist, most of our team is technical. Like we just like to hang out with founders. If they have cool ideas, we like to jam on it with them. Be like, oh, can we break it this way? What if we do this? Have you thought about doing this different kind of token distribution, or this? If you try to use a PID over here, or do this thing over there. We just love that stuff, and that's part of, you know, going back to your original question of like what's different from a crypto VC from a traditional VC, is that we just live in this stuff. You know, we've been using DeFi since the very early days, back when there was no reason in hell to be using DeFi. It was so painful, but it was just cool. It was just cool. You know, we just love to nerd out on what can be possible on smart contract. And now we're just in a totally different place with, you know, the Polygons and the Layer 2s and the Binance Smart Chains of the world, making all this stuff much more approachable and usable. And, you know, we're an order of magnitude away from what I suspect is the next phase of coming of even more adoption than what we're seeing today. But all of that just gets us incredibly energized in a way that I think you'd be hard stressed to find that from a traditional VC. And that's a lot of, I think, what entrepreneurs in this day and age in crypto really respond to, is they want more than just capital, they want a partner. And that's what we try to be.
I love that. And I think you brought up something really insightful. I mean, a number of things, but one in particular is I think a lot of traditional VCs tend to be localized, geographically focused. And in the DeFi space, it's extremely global, and that makes it very different. And that's where a lot of value can get added. I mean, if you don't have a China strategy, for example, or an Asia strategy, and breaking down sort of the different countries, which, are very nuanced, it's difficult to access a lot of what's going on in this space. I mean, and it's almost like a totally different world. I actually did one of my masters at Tsinghua Daxue in Beijing and spent a lot of time with, early miners in the space, a lot of the largest, funds and exchanges and companies there. And it's just completely different as a way to sort of approach this entire market and even to access it. So I think that's very insightful. Keeping in mind, we are running short on time, but I do want to touch on, looking 5 or 10 years into the future. And this is going to be really short, but Alon, I know you had a lot of very correct predictions, in the space over the years. So you got to reach into your crystal ball. What is, 1 or 2 things that you think we should be looking out for over the next 5 to 10 years, with DeFi and sort of blended with this VC world and what it'll look like?
Well, I'll say, exactly what Haseeb said was right, in that we're, by default, the fact that we've been here for multiple years, all 4 of us, means that we're such nerds for it, right? Because there wasn't, at least for, let's say, 2.5 or more of the last 3 years, but even before that, there wasn't like a huge incentive other than being obsessed with it to participate, right? Like, I don't know, we were doing it in spite of our own short-term, probably, health in terms of financial and mental and everything else, because we're all obsessed with this, right? So a lot of those original products, I think, that we invested in, I think, our first investment was Total, and it was because I was using Ether Delta and stuff like that to participate, right? And we all were, and the product stunk. And the reason I invested in Total was because they created a product that made DeFi usable. And even the original version of their product, which has been copied about 1 million times, and most famously by, like, let's say 0x or 1inch, right, are still really early and not that great of products from a usability standpoint. So I think the next evolution will be all of these things that we as crypto natives considers like products, like Aave and things like that, are actually going to become the back-end systems for more traditional finance groups. And I think that we might not see it, or the consumer might not see it, and it'll depend on regulation certainty, and it's probably actually gives a huge advantage to international companies versus US-based companies, but I think that's the future. And I spoke too long. I want the other guys to talk.
So in a quick sort of sentence, Haseeb, what do you foresee as the biggest long-term risk you foresee in the space, and Min, the most exciting opportunity you see over the next 5 to 10 years?
You said the biggest long-term risk?
Yeah.
Wait, so I got to be the pessimistic one.
There you go.
All right, fine. Biggest long-term risk, I'd say, is probably regulation. I'd say if DeFi is naturally more subversive than I think most of the other stuff going on in crypto, because it has a collision course with the natural instinct for a financial regulator to control everything that is possible for people to do. And that means that it's very uncertain what's going to happen in the intersection of DeFi and regulation.
Yeah, I think, on a more optimistic note on the opportunities, I mean, the institutional card, I think, is one that we can't ignore. I think a lot of people talk about what if institutions start investing in DeFi. But, one conversation that we had recently with a global partner of ours that stuck with me is that, one of our partners wanted to figure out how to use smart contracts to deliver derivatives. And that move alone will save them, probably in excess of current DeFi market caps. And when you kind of extrapolate that across all the financial institutions, in the world, it becomes pretty much a no-brainer once one person does it. I kind of came into the space really because of frustration with fintech, frustration with the payment stack. So I'm very excited to see mainstream fintech applications with beautiful interfaces built on crypto real. So, and I don't think we haven't fully started that yet. It's really improved a lot, but that will happen, and I think it'll happen a lot quicker than we think.
Love it. So there you have it. So mainstream applications, PayPal, hope you're listening. and many others out there. But this has been a very insightful discussion from our incredible panel. And I can personally say I've learned a lot, and I'm sure our audience will agree as well. You know, I'm encouraged by where DeFi is going in that intersection with VC. As you heard it, crypto VCs are clearly adding a lot more value. And that has been the preference of a lot of native projects in the space. Now, there's a lot of other incredible presentations and panels from experts all around the world remaining at the Global DeFi Summit. So what better time to learn from these individuals from the comfort of your own home? Be sure to check them out, as I know I will be. Thank you again to our incredible panelists for making the time to share your insights.
Thank you.
Thanks, Alon.
Thanks, everyone.